Are you? Hi, everyone. Thanks for joining us. I'm going to give a few minutes for other people to come into the.
Good morning. Atlanta. Wow, that's cool.
Oh, yeah, it's still 11:57. These are the early
These
birds.
are the early birds.
Yeah,
Usually people start stumbling in like 11:05.
exactly.
Early's on time.
There you go. Early's on time.
That's a great picture of you guys.
Oh, thanks. I know my wife makes me look better. That's what it is.
All looking like a boss.
The railing, Monica looks like she's holding like a wand or
Oh,
like a
true.
baton or something.
Of course she's standing higher than me, gotta or better yet, she's the puppeteer and I'm the
Right.
strings in the back. So
Yeah, exactly.
True meaning.
yeah.
So we have a mix of people today. We have a lot of agents and then also some potential investors too.
Cool.
Oh, we got Ivan Choi
Is
joining
Ivan
us.
Troy here?
He's joining right now. He's
Wow.
here.
Hey, Ivan.
Hi, Ivan.
Thank you for taking time out of your busy day. So where's Ari? Is he in town?
Yeah, he should be joining soon.
Oh, cool. I'm just playing around with the little buttons. Like, where should I put everybody?
I'll let a few more people. We'll give it a few more minutes for everyone to
Yeah,
join.
sounds good.
12 o'clock now.
All right, should we start? What do you think? 5 minutes? Maybe I should hit some jokes.
I know. No, people are still joining like right now, so I'm trying to admit them all. So let's get another minute. A lot of people are still joining.
Sounds good. Sounds good. Hopefully, I share some good information with everybody
I
today.
know, right?
Yeah, I literally prepared 5 minutes before the meeting. I'm just kidding. It's not much to prepare, is what I say all the time anyway. So it's Just like
Exactly.
organized thoughts.
People are still joining.
You know, I see that people are starting to come in.
Yeah, I gotta give it a few more minutes. No one's ever on
Let's
time.
give it to like 12:05. Let's see. Yeah, I see people coming in the room right now. Hi, everyone.
Yeah.
You got your sound going? Is he talking yet? He doesn't say anything yet.
All right. I went through and I muted everybody else except us for now.
Okay.
Let's see. One person. I'm just giving a chance for everyone to join. There's still a lot of people joining, but we'll get started just in 1 or 2 minutes.
Yeah, we'll give it 2 more minutes. I should have wore the same outfit as the photo. That would have been funny.
With the same stairs in the background.
Same.
Oh, we have an AI assistant.
Yeah, I see that. Nice.
That's cool.
That's cool. That's cool.
29 participants.
Let's see.
All right. Got a good people here.
Yeah, let's get started.
All right. Okay, guys.
Well, thank you everyone for joining us today for our monthly webinar. I'm excited today to introduce Elsie Bay. Elsie recently joined the RealiFi Realty family and is looking to grow his team, the Strive team, and we're really excited to partner up with him in doing that.
Yeah, it's been a great time. I mean, obviously, me and Jamie known each other for a long time, and I was when she started her company, she didn't even really tell me about it. I had to learn from it online, and then I asked her like, "Hey, Jamie, do you think it's a good idea if I join your company?" But she's been great. I love the team. I love their concept. I'm very excited. And so far, you know, with all the help with the social media and also helping me build the team, you know, I'm very grateful and happy with all the effort that they've put forward to bring me on. So I'm loving it.
Oh, thank you, Elsie. I've known Elsie for many years and through Aria, and he has built a very successful business. And Elsie and I have always been like competing, like who can produce more, but now we're excited to partner together and do even more business together. So Elsie's built a really cool business that's focused on helping his clients acquire investment properties to actually rent out on Airbnb. And over the last year, a lot of agents have not been doing as much business because the volume of transactions is overall down. But Elsie has been still growing his business because his clients are able to kind of defeat the 7.5% interest rates. And he's going to tell you a little bit more about how he's able to do that. And he's going to give an overview of how to source prime investment properties, how to navigate permits and regulations for short-term rentals, and also tell us more about his white glove property management service that he runs with his wife, Monica, that you see in the picture here. So let's dive right into it. Elsie, I'll let you introduce about yourself a little bit and get into your presentation.
Awesome. Thank you, Jamie. So I started in real estate. My name is LC Bay, and I started in mortgages back in 2003. I was introduced into the industry right out of college. My fraternity brother, Edgar David, who is for those of you that know him, he's pretty well known in the mortgage circles. You know, he was 21 and he was betting like $10,000 in Vegas, and me and all the fraternity brothers are like, "What's going on? What are you doing right now?" And he told us he was in lending, and that's how I got started. So I started in 2003. I saw the whole subprime mortgage. I had a front row seat in what happened in 2008, and then in 2013, I transitioned over to real estate. And then before that, 2013, after the crash, I worked for Wells Fargo and was a branch manager. I had about maybe 7 or 8 different banks, 3 or 4 processors, and about 15 loan officers that I could put into the banks. And after working for Wells Fargo for about 4 or 5 years, I decided to make the transition to become a real estate agent in 2013. And that's where we're at now with the focus in investments. So that's my prime. I mean, I do regular buy sell, and my main arm that I kind of focus on as far as my origination is working with a lot of the investors. So, and with the area specifically in Airbnb investments. How I started into it is because when I first looked at investors, they were always kind of forced between 2 choices. The first choice is to have a lot of cash flow, but then I'll have to be out of state, or stay in LA County, but have a lower cap rate and maybe no cash flow, maybe even negative, you know, for all you guys that know. Even back when rates were at about 3.5%, if you're going to buy a house for maybe 500, 600, 700,000, even if you put 20, 30% down, you're still going to be negative on the monthly payment. The only way at that time, when rates were around 3.5 to 4% for you to be positive, is if you put about 35% down, and then maybe you break even, right? And that doesn't even include all the other maintenance fees or management fees or things that come up as owning the property. So I looked at a bunch of stuff. I looked into transitional housing. I looked into drug rehabilitation, anything to do with real estate that I could rent out to get more revenue than regular rent, regular long-term tenants. And everything had its challenges. The one thing that led me back to getting the original goal of having cash flow and staying in LA County is Airbnb. So let's go into the methodology that I came up with and what I share with my clients and how we're able to thrive into this market. So we'll start off with looking at the properties that we're looking at. So this is property number 1. And as you can see, this is a fully remodeled property. And this is the after result. So let me show you the before picture. So here's the before picture. Now, this type of property is mostly the type of property that we're looking for. And what I mean by that is that, as you can see, it looks like there was a lot of changes that was done, but all that we changed on this property was to just repaint the interior white, and then we changed the flooring. Okay. Now, a lot of times when I look at property, these are the properties I like because I like the stuff that is not going to be presented in the best possible light. So for example, things that are not staged, maybe it's not very clean. There's a lot of clutter in there. And because I looked at a lot of properties, and for those of you that sell properties out there, you're able to look past the mess, right? So what I saw was a great layout, and it has beautiful windows. It overlooked the backyard. And I know that this type of layout is not normal. In other words, it's not common. It seems like every house should be laid out this way. But when I go tour properties, I see a lot of strange things. So whenever I find something that looks pretty good or pretty normal, I kind of highlight it, especially this one, because it wasn't staged. So I knew that this kind of aesthetic value was not going to translate on the photos, and then they were going to get less foot traffic. And this one I was able to get below list price. So here's the bedrooms. And we already kind of knew that going in, we have a color palette that we want to stick with. And we kind of just decorate around it. Little changes that you can make that will make it look a lot better are just the lighting. For example, if you look at the lighting here, just a chandelier, that chandelier was like $200. But it makes the space look a lot better. Okay, here's property number 2. So this is actually my property that I bought in Long Beach. And same thing, this one, this is the finished product. This is what it looks like. When we walk in, me and my wife always have a vision in terms of what colors we're going to go and what kind of style. And then we just kind of pick our furniture around it. So here's the before photo of what it looked like. The funny story about this property is that when me and my wife first walked in, I thought this is the one, but my wife was like, oh, please, no, not this one. We're going to have to spend so much money on the remodel. And I was like, nope, we're not spending any money. And as a matter of fact, we're keeping everything. And the truth is that we kept the tiling here. We kept all we did was just repaint. And we even kept this stone wall right here. And my wife was like, oh my God, we're going to have to demo this. We got quotes on how much it was. And because it was actual stone, not only did we have to demo it, but it was going to cost a lot to just remove it and to just throw it out. And all we did was we just repainted it. And that was like a very good, simple solution. Never underestimate the power of paint and never underestimate the power of Swiss coffee. I swear to God, the Swiss coffee white works well in almost any home. And this is one of the main reasons why all museums are painted white. It's because all the art is so colorful. If I have a yellow museum, if I have a blue museum, if I had a gray museum, it would be so hard to match all the art in there when everybody has a different color palette. If you go with a white background, then it's going to be much easier for you to fit furniture around it. And then your furniture can be the ones that has the accents for the home. Okay, so whenever I look at the buying Airbnbs or recommending Airbnbs to my client, there are 5 main principles that I look at, okay? So the first one is, if I could buy anywhere, blank slate, right? I have all the money in the world, money is no object, I can buy anywhere, where would I buy? Well, my investors, what I know is that they have one main goal that they want, which is, I want to buy at a particular price, and after I buy, I want this price to go up, right? I think everyone can agree that if you have an investor, if you tell them like, hey, I know that's your goal and I'm going to make that goal happen, they're going to listen, right? So how can we find out which areas are going to be able to increase its value after the purchase? There has to be some kind of way for us to tell, aside from just emotional thinking, like I think it's going to work out, or I see a coffee shop here, it looks like it's going to be developing, it looks like it's busy. All these things, if you tell your investor that, they're not going to resonate with you because it's very subjective. It looks like you just made an assumption based on your own personal observation and that there was no data behind it. And why would I put a few $1 million in this project just based on the way this person feels? So I have to be able to give my investors something more concrete than that. Well, what I found out was that developments are the leading indicator into a city and whether a city is going to gentrify or not. And this is not something that I came up on my own. I actually was let me tell you the story how I found out. I was at a fundraiser for a fashion show that my godmother was invited me to. I was very lucky. She's in the 1%. She hangs out with Jackie Chan and she knows like Russell Simmons and stuff like that. So at this table that was like, I think my seat was like $350 for that dinner. It was a fundraiser. I was sitting next to an older gentleman. He was probably in his late 80s. And he was a Jewish real estate investor. So I asked him, I was like, hey, sir, if you could go back in time and talk to your 26-year-old self, what is the one lesson? What is the one knowledge gift that you would bequeath him that will be able to accelerate his real estate career? Because at that time I was 26 and I was trying to build a career for myself. And then he told me that his secret to his success was that real estate is one of the few things that you can look into the future. You almost have a vehicle to tell what's going to happen in the future because of permanence. See, in stocks, when you give an earnings report, the market reacts very fast. But when you want to build something in real estate, that has to go through planning, that has to go through architecture, that has to go through engineering, and then it's got to go through the fire department to make sure that they have enough firefighters, water supply, electricity. You know, it's a big deal. So it's a slow-moving giant. Based on the permits that are issued by the city, you could literally stand on a street corner and look out and see what they're going to build. And what he did was he would look for all these developments that are going to happen, and then he would buy around it. See, so that was what I thought was the number one gem that I got from that meeting from him, and I applied it, and it worked. So, for example, in Los Angeles, we have currently one in a lifetime event happening, which is the 2028 Olympics, right? So because the Olympics is happening here in LA, and you're going to have the world's athletes, the world's media, it's a lot bigger of a task for a city to take on than just like a Super Bowl, because the Super Bowl is just one day. When you have the Olympics, it's going to be over a month, and all the buildup before, and then the buildup, and then the closing ceremony after. So this city, whoever gets awarded to host the Olympics, has to have not only the infrastructure, but also the roads, the services, the hospitals, the policemen. There has to be a lot of money going into it way before the actual Olympics. This is also part of the reason why when you bid for Olympics, it's always 20, 30 years out, because the winning city has 10, 15 years to build the infrastructure for this big event that's going to happen. And that's what's happening right now in LA. There's a lot of cities, sub-cities of Los Angeles that have a lot of developments in there. And I'll share some gems. You know, Inglewood, outside Inglewood, all the South Bay, Manhattan Beach, Long Beach. These are areas that they're going to have the games. And if you look into these areas, there's a lot of developments that's happening right now. So that's the number one thing. I want to know what's going to happen to this city before I buy, and I want to know what it looks like after I buy. And the best thing that could happen is after I buy the city, it gets beautified, and now whatever I bought just went up in value, even though I did nothing to it, because the surrounding has changed. So that's the most important part, right? Second is regulation. Okay, so now that we know these cities have potential for upward movement, does it allow for Airbnb? Now, regulations fall under three types, okay? Either it is not allowed because it's banned, it's allowed with rules, or it's not regulated, okay? The ones that are allowed, that are not allowed, I don't touch at all. And guys, do not use Airbnb as your guide to whether or not it's allowed. For example, I have clients that call me like, hey, Elsie, I'm looking at this property in Santa Ana. You know, the numbers pencil out. It looks like it's going to be great. And I tell him, you know what? Santa Ana does not allow for Airbnb. And he goes, well, what do you mean? I see plenty of properties in Santa Ana. Okay. It could be either they have operating under the permit that is no longer available. In other words, it's maxed out, or they're operating illegally. Okay. And there are a lot of people that are operating illegally. Now, my clients say, well, why don't we do that? We can do that too. And I'll say, okay, sure. I mean, I personally don't want to take that risk. I wouldn't buy there myself. If you want to buy there, let me ask you these questions. Okay. You're going to spend $20,000 to $25,000 on furniture. What if you run into a neighbor that is very unhappy about what you're doing, and because she has the law on her side, he or she has the law on their side, now they're calling the city every day to make sure you get shut down. And in the meantime, you're going to get fined thousands and thousands of dollars, right? Let's not build our empire on loose soil. Let's build on a solid foundation. There are cities that allow for it, at least if they don't allow for it not to be regulated. So some of the cities that are not regulated are Whittier. Whittier is not regulated unless you're in South Whittier. South Whittier is a bit different. They don't allow it. But anything outside of South Whittier, they are not regulated. Another area is Downey, and another area is Norwalk, and another area is Monterey Park. They're not regulated. So because it's not regulated, even if they regulate, there's probably a higher chance that you're going to get grandfathered in. For example, I have a client that bought a property in Fullerton, and for a long time, Fullerton was not regulated until last year. They decided we're going to regulate. And because they knew that there were existing homes in Fullerton, they allowed for 120 homes, the first 120 to apply, non-owner occupied, they were going to potentially give you the license if you met some of these other criteria. So in other words, there wasn't anything that was not permitted, that it was legally sound, structural. There were a bunch of other categories. Most of the time, if you are in an area that's unregulated, you probably will, a high likelihood that you're going to get grandfathered in. That's probably the riskiest position that I would take. I definitely would not take one that is not regular, that is not allowed, either allowed and there's rules and I know how to get it, or at least not regulated. Some of the other things that you got to think about is transient occupancy tax. That is one of the regulation. The worst thing that could happen to you is to owe the government taxes. So Airbnb typically will collect this for you. However, not in every area. Sometimes you're in an area and they don't collect that. And then 6 months later, you could get a letter from the government saying that, hey, you owe me 15% of all your revenue. And if you gross $10,000 a month, that's $1,500 a month. And if they send it to you 6 months later, that's a $9,000 bill. And if you have 3 or 4 properties, you can just add up the math from there. So the most important thing is to check the regulation. Don't use Airbnb to check it. How do you check it? You got to call the city planning department itself. And you got to talk to 1 or 2 people. Either it's the planner, the city planner, and the code enforcement. One of them will know. Now, this calling the city, you may call them once and you talk to someone and then they tell you, oh, it's fine, you can do it. Me personally, I like to call 3 times. All right. And I want to make sure I talk to either, I'll ask them, are you in charge of code enforcement? If you're not, okay, who is in charge of code enforcement? Are you the city planner? Who's the city planner? Who can I talk to as a supervisor? And you want to actually be that diligent, because if you get a hold of someone that's new or they're not familiar, they're just trying to get you off the phone, and you want that actual information. Some city websites will have it on there, but it's not very accurate. The most accurate is if you talk to code enforcement of that city, they'll tell you exactly what the rules are. And then I'll just go with that. Okay. So let's say you find the city that is doing a lot of developments and you like this city, and then it actually allows for Airbnb. Then the third most important thing for me would be, now that I know where to buy, which street do I buy on? And why this particular house, right? And aesthetic value basically is just curb appeal, right? So if I know that this city is investing, let's say, city of Long Beach, for example, is investing $5 billion into commercial developments, right? They're building pools, they're building hotels, they're building retail stores, they're building luxury apartment condos. So the branding is going to change at some point, right? And we've seen this in the past, like downtown LA, for example, Echo Park, Silver Lake way back in the day was not very good neighborhoods. Now Silver Lake is considered a nice affluent area. So let's say that this city will go through a transformation like those other ones that I've mentioned, right? If that were to happen, this particular home, does it look like it will sell for multiples of millions of dollars? In other words, does it look expensive, right? Don't just go for the lowest price. So sometimes, let's say there's 2 houses. One is like 900 and one is $1 million. But then a $900,000 one, it doesn't have any curb appeal. There's nothing unique about it. It just looks very flat. But the one that's $100,000 more, it has a nice front yard. You have a frontage. You have a beautiful wide frontage. It's not narrow. It's not behind a house. It's not a flag lot. That, for me, when the branding changes, this is the type of house that people are going to buy for multiple millions of dollars. And that's kind of like what I look for. I kind of look for the house and I just imagine, like, when all the development is in, And now this area is super hot. Does this house fit that look? And I got to think about the future, not for what it is right now. And let's say you find a house that has a nice curb appeal. It allows for Airbnb, and it has a lot of developments happening. Then the next question I ask is, well, this house that has a nice curb appeal inside, what about it screams Airbnb, right? Like, why would someone pay me $300, $400, $500 a night to stay here, you know? And let me tell you, if it looks like a regular house, like an auntie's house, they're not going to pay you that, right? So you gotta think about the other side, about the people that are going to rent. They're probably saving all their money to go on vacation with their family, or to go to a convention, or for business. And they're looking for something that makes them feel like they're not home. So if we have a pool, a jacuzzi, if you have a game room, or if you have something about the house, whether you have a mural or you have a Instagram type of area where it has a green wall with a sign and they can take pictures, something to just give them the idea of relaxation, vacation. If you can design a home where they want to take pictures in it and post it on Instagram, then your occupancy rate and your nightly rate is going to increase based on that. So that is something that I don't want to walk into a house and have to take down this wall, extend this area. No. I want to walk in and pretty much the layout is good. I just need to do a quick makeover, like paint, flooring, maybe swap out the cabinets, maybe change the countertop, but I'm not doing any kind of like major plastic surgery to this home. Okay. Then the fifth and final thing that I look at is, for the price and the condition, how does it compare to the rest? Okay. Now, this part, most people, when I talk about this part, most people think I'm talking about, I got to find the cheapest possible deal. No, that's not what I'm talking about. Okay. Flippers have to find the cheapest possible deal at that time, because when they go to flip the house, they need to have that spread, right? But if I buy a house today versus buying a house 3 months ago, 3 months ago is going to be cheaper than right now, right? So what I'm looking for is, for today's market, for what I'm getting, is it a good price? If it is, and how long is it going to take for me to launch this? Because I got to take 5 weeks to get the permit, if there is a permit, and then I got to get the furniture here. So usually it takes me about 3 to 5 weeks to launch it. After that, is it like, do I have to remodel the kitchen, remodel the bathroom? All that gets factored in, right? So I may opt for a nicer property that is more turnkey, because the carrying cost is lower. So I don't have to go for the best price. I just have to go for the best deal at that moment. So if it passes all 5, then that's a property that I would go for. Okay. Now, most of the time I get this question a lot, which is, is it the time to buy right now? This is probably like the number one question that my investors ask me. They're telling me, look, LC, affordability is at an all-time low. Interest rates is at 7.25 to 7.5%. How are people affording? Where is the discount? They're all waiting for the price to crash, and they're telling me, look, I think 2008 is going to happen again, or I think that, the market's going to be squeezed because people just cannot afford it. So what do I think? Well, let me give you some stats, okay? The delinquency rate in the United States as of May 2023 is 2.6%. In other words, out of 100 people, 2 to 3 people are 30 days or more behind on their mortgage. That's a very low statistic. It is almost the lowest delinquency rate we've ever had in our history. And what I mean by the lowest, I mean, a lot of people are paying on time. Okay, this is the record of people paying on time. And then you go, well, why is that? Why is the record of people paying on time all-time high right now? In other words, everyone's paying on time, even though inflation's out of control, rates are up. This makes no sense. Well, then you look at the actual stat of where the rates are. So 82% of all mortgages in the United States is below 5%. Okay, what that means is 82% have a rate with the 4 in front of it or lower, 4.25, 4.75. Okay, 62% of everyone is below 4%. They have a 3 in front of it. Okay, so when people are saying like, oh my God, rates are so high, yes, that's true, but they're only focusing on one part of the story. Okay, I went to school for econ. All right, I'm an econ major, and the reason why I like econ is because it's a very simple subject. You only need to know 3 things: supply, demand, over time. All right, and what they're talking about is a demand side, which is rates are high, so demand is low. Yes, that's true. There are very little buyers. But what about the supply? When you have 82% of all mortgages below 5%, and the current rate is at 7.25, now sellers think that their mortgage is an asset. This is a new thing. Me and you guys, all realtors out there, when you go on listing appointments, now this is the number one objection. Okay, Elsie, I like your plan. I like we're going to stage it. We're going to sell it. I see the profit. I like it. And you want me to exchange out of my 2.5% rate into a 7.5% rate? There's no way that makes sense. So what this tells me is that there's very little supply. And what about the supply of the future? Because it's a 30-year fix, people are not going to be forced to sell. And if the only way to sell is in other words, the only way to be forced to sell is through foreclosure, and foreclosure delinquencies are at 2.6%, I mean, there is no supply coming down anytime soon. Okay, so that's one. The second thing is, yes, US economy is not doing well. However, you got to look at the US economy as in comparison to everyone else. Okay, so China, I don't know if you guys follow the news. China, I think everyone knows they used to have that one-child policy. That one-child policy now is wearing a lot of its negatives, because the number one resource that a country can have is human capital. Human capital is the number one resource. And when China did the one-child policy for 2 to 3 decades, it was 2 humans making 1. And now the population is in decline. And there's no way to reverse this, because it's not like I can just create a child out of nowhere. It takes 18 years for them to become an adult. So they're going through the next 2 to 3 decades, the population is inverted. In other words, the old population is going to be more than the younger population. And the number one export that they have is cheap labor, and that's going away. So what I'm telling you is that with this decline in China, how this affects the United States is in this third one, which is telling you that US Treasuries is at $4 trillion, okay? And why do I put that in there? And the total number of capital market wealth is 200 trillion in the global market. And if China declines as a superpower, this is going to affect the entire world, right? And if we have a global recession, all right, people think that, oh, real estate's going to go down. Not necessarily true. If we have a global recession, traditionally, what most people do, investors, what they do is they try to protect their money. They're going to sell and they're going to exit out of emerging markets like China, for example. If they exit out of China and they sell their stocks in China, they don't keep it in cash. They have to take that money and put it somewhere else. The safest money that you can put is in US Treasuries. If the international market starts to buy more US Treasuries, which if you follow the treasuries right now, they're already starting to do that. If more people jump in to buy US Treasuries, the Fed doesn't even have to lower the rate and mortgage rates will come down. Because if they buy the 10-year, the 10-year rate is going to go down. And then that translates to our mortgage rates. And our mortgage rates could go down even if the Fed doesn't lower their Fed fund rate. So for these reasons, I'm telling everyone, like, look, I'm not vouching for commercial real estate. I think there's a ton of mess there. But when I talk about residential, this is the time to buy because everyone's on a 30-year fix. Everyone has low mortgages. There is housing issues. We have a shortage of housing. And to build more housing has always been a challenge. Okay, so I think if you can buy something now, this is probably the best time. When they lower rates next year, there's going to be even more buyers and still no sellers. So that's basically what I tell all my investors. And I turn it back over to you, Jamie.
So I'm going to open it up for questions. I have a question for you, Elsie. I know other people probably are wondering as well, but like we want to know about the numbers. So like, let's say I buy a $1 million Airbnb in Long Beach or one of these cities that you are recommending. What is like the monthly return look like? How much on average? What's like the worst month, the best month that you've had? We want to hear a little bit about like what the numbers are like.
Okay, so if you're buying a $1 million property in Long Beach, then you should, based on the numbers that I've collected since we started, you should be between $8,000 to $9,000 gross a month. Now we're talking about Airbnb. It's a seasonality type of business. Okay, so it's not like every month is the same. It goes up and down. Okay, and the hot months are gonna be from the end of Q2 to the beginning of Q3. So basically the summer months, right? So May, June, July, August, these 4 months usually are pretty good. And then November, December is pretty good. September is usually slow because it's back to school. January is usually slow because you just have all those major events. And then the other months are normal. And then you have the summer months, which are super hot. So to give you an example, it really depends on the property that you pick. One of the properties I have this year is for the last 3 months, it's like $18,000 a month, in Long Beach. And we bought that property for, I want to say $925 in February when I told him to buy. At that time, there was nobody buying, right? Now, that is an outlier. Okay, that's an outlier.
Why do you think that one is making so much more than the others?
So that one is making a lot more than the others because of the way it looks, so the seller was a divorcee, so they did not plan to stay on a short-term basis. They invested a lot of money into the home and they completely hardscaped the backyard. It looks very tropical. And then when we designed it, I leaned in with the theme. So because of those reasons, it has that hospitality look. Then people fell in love with it, and it gets really booked. Now, if you have a pool, it's also going to do well. Let me see if I could pull up the one that I was talking about, just to give you a visual idea. There we go. This guy's killing it. I was just talking to my client today for this one. He was telling me, can we go up in price? I was like, oh, I think you're kind of maxed out. But yeah, here you go.
Wow. So $450 a night is the average.
450, 500, but it fluctuates. And I use
for a property that you bought in the 900s. Yeah.
So I watch the pricing daily too. So I watch the pricing, and then if it gets closer and it's not booked, I lower it. But then further out, I raise it. I also use a software to help me like kind of do the fluctuation. Some weekends are more because there's a concert going on, or depending on what the flights. I have a software that tells you like when the flights are coming in, if it's booked, not booked, halfway booked, and then they change the pricing for me daily based on that. And I also watch it daily. And this house, has this tropical look, and then we just designed around it. We just leaned in with the design, right? And we just went like, the theme for this one was Tulum, Miami, birth child. If Miami and Tulum were to have a baby, this is what we think it would look like. So
nice. Awesome.
Yeah.
So the staging and the design of it makes a huge difference. Like you're getting I think higher than probably like the average Airbnb in the area because you put more thought into the design and the interior, right?
Yeah, so this one, AirDNA, which is another software that a lot of people are very familiar with, AirDNA said that I was only going to make 6,000 a month, just to give you an idea, because AirDNA cannot account for aesthetics. So they're just looking at the square footage, they're looking in the area, and then they're just comparing it, kind of like your Zillow values, you know, and your Redfin estimates. It's the same thing. They can't really account for the aesthetics, so they're just giving you what other people are doing, and it's not going to be the same. Yeah.
For sure. Does anyone else have any questions for Elsie about like how to choose properties, the regulations, the cities, anything like that? If you do, feel free to unmute and ask or type it into the chat.
Hey, Elsie, Anthony Javier here. Can you guys hear me?
Yes.
Hi. So in regards to your, statement earlier with like the Chinese news, and I've been following that a lot. So if there is a global recession, if we're not already in one, have you been getting a lot of Chinese nationals contact you to invest in the United States? Because obviously, if there's a recession, they're going to have to put their money somewhere else. And aside from bonds, and the most, favorite thing to do is just to put it in real estate. So have you been getting Chinese nationals talk to you about investing in the United States? And if not, what's your game plan for that?
Got it. So I used to have a lot of Chinese buyers, okay, because I'm obviously Chinese. And the Chinese market I'll be upfront with you, it's too late. Because the wealthy people that were in China, they knew the writing was on the wall. So what they try to do, the reason why we had such a huge surge of buyers in 2012, 2013, 2014, 2015 was all the Chinese buyers pushing up all the price, buying cash, no contingencies. And that was the market because a lot of them knew that, their time was limited. Because if you're in China and you're wealthy, it's kind of like, and if you travel around the world, you kind of have this in the background, like, oh my God, like maybe I should protect some of my wealth. And the way they protect is to get it out of the country. So that was that time between 2011 to 2016. There was a lot of Chinese buyers. After 2016, they put in capital restrictions in China. And you can only, send out maybe, I can't remember the number now, but I think it was like 50,000 or 50,000 a person. And it's even more stringent now. Right now, from what I understand, the Chinese economy is kind of like falling off a tail cliff. I don't think that there is anyone really coming out of China to reinvest because they're literally falling off of a tailspin. So for example, okay, how is this happening? The number one way for China to keep growing was to increase their GDP was through construction. The reason why they did it through construction is because it's very hard to increase GDP based on services. You got to like innovate your service, right? Like how can I get more people to spend more money on like iPhone or whatever? You got to innovate it, right? But with construction, you can just throw $1 million to go build this bridge, $1 million to go build this development, and then you hire the workers, and then your GDP just automatically grows. So what happens is there's a lot of these projects that didn't really make sense feeding into it that was not for profit. It's just the government is just pumping money into this. And a lot of the big developers started doing this, and then they started collecting money up front from the clients to build the next project. So now it's like a Ponzi scheme. They don't even build it. They take the down payment because there's such demand out there. They take your down payment and then they'll go build. So right now in China, there's a huge hole in terms of people that have already paid the deposits that the construction is not even up and not going to be built. So they have those issues. They have banking issues from people withdrawing money. That they put a limit on how much you can withdraw from the bank right now because it's a fear of flight of capital. So this whole China market is not even about like, oh, where can I get the rich people to invest? It's more like they're kind of, in my opinion, this is my opinion, they're imploding amongst themselves. The rich people are trying to figure out what to do and how to make money. Places like Shanghai, Guangzhou, where equivalent to New York, if you watch some YouTube videos, I think there are people shooting it, like saying like, look at this street. It used to be bustling and now it's like empty. It's pretty bad. Okay. And the idea is that China is the world number 2. If their economy is contracting, right? Investors are going to flee emerging markets. In other words, investors are going to flee countries like that are developing, you know, in an expansion, during expansion phase of economy. In other words, when the economy is going up, you want to buy or you want to invest in developing nations because you're going to get a lot more bang for the buck because they're so undeveloped, right?
So that actually follows with my question. Since these guys, China is imploding, do you think we're going to see another wave of Chinese nationals investing in the United States?
I think it'll be very difficult because it's all controlled by the government, and the government right now is restricting flight of capital. Let's put it this way.
Yeah.
On one of the days on the stock market when it was trading and it fell so fast, they literally stopped trading. They just stopped trading for 2 weeks, bro. Imagine if Dow Jones just stopped trading for 2 weeks. You know what I mean? This is the kind of level of power that the CCP have in terms of the economy. So that's what I mean by they're not going to allow capital to fly. They don't want the yuan to go out into the world because they're worried that it's not going to come back. So they're trying to hold on to as much capital in the country as possible. And they're going to restrict anyone from trying to get the money out unless it's really for business. So it's very difficult to get money out. And for those reasons, I don't think that we're going to see too many of those buyers here. Maybe large scale projects, but I doubt it.
I agree too. I used to have a lot of Chinese clients, like right at the beginning of my career, 5-10 years ago, but like lately, almost none from China. But moving on, someone says your thoughts, 2 questions that are kind of related, actually. One person said your thoughts on investing long distance out of state, given today's market conditions. And then someone else said, how involved are your investors? Are they purely just investors or do they have a say in the process? So maybe you could touch on both of those at once.
Yeah, so our investors, they vary, you know, some investors, because I start out with friends and family. So some of them, they're very involved because they want to be, you know, they want to like, oh, what's going on? I want to see how I can help and stuff like that. Most of them are hands off. They don't really, they just wait for my email and for me to Zelle them or ACH the deposit. So for us, we're a turnkey. We source the property for you. We tell you how much it's going to make. We figure out a budget. And then we figure out a timeline, and then we literally manage it for you and get the process going, and then get it launched, and then get the tenants, get the cleaners, whatever we need, and then just it's a white glove service. The investors do not have to participate at all. If they want to participate, you know, we're happy to have them be as involved as they want up to a particular point. And then what was the other question with regards to investing out of state? Was it investing out of state? I think it was investing out of state.
Investing out of state, like if investing out of state, is it your thoughts on investing from a long distance, basically? Got
it. I don't believe that I myself don't like investing long distance, whether it's you know, I have a property in Malaysia and I hate that property. Okay. So I'm speaking from personal experience, you know, so that's very far away. For example, when the guy calls me, my manager calls me and goes, hey, this thing is broken, right? I need to fix it. Okay, let's fix it. Call me again. Another thing is broken. I don't even know. How do I know if it's really broken? It's so far away. I can't send someone to double check it. So those are the kind of like the constraints with, you know, when it's out of state. For my clients, you know, like it's down the street. So whenever they want to see the property, they can go check on it, you know. And I have clients that even though they're not involved, they'll be like, hey, I want to stop by and just take a look. Yeah, no problem. It's right there. Bam. You can walk the property. You can see what's going on. It's much more easier for you to be able to visually see how the property is being run. The other thing that I don't like about out of state is that I think personally, California is very undervalued, right? So my whole thing is I want to buy low and sell high. And I think the branding for California has been horrible. Everyone's leaving out of state, right? So even though in LA County, Orange County, we haven't seen much price drops, in other parts of the country, we're seeing huge price drops. Why? Because when the people that left New York or LA go into an area like Arizona or Florida, and they're used to bidding 100, 200,000 above list price. Guess what did they do when they went to Florida? Same thing. They're like, you know what, 300? How about 400,000? I'll bid 100,000 above list price. 400 is still cheap. But the problem is in that area, it was never that popular. It was only popular because of COVID, and everyone went there because they were trying to escape either New York or LA. Now that COVID is over, people want to come back. That area that valuation that they're at, I don't think is sustainable because it was a one-off, unique type of situation where it was only because of people didn't want to stay at home and they want to go out of state. So for me, I feel like the branding for LA is very low right now. We have all this looting going on, you know, taxes are high, you know, all this bad news. And for me, you know, I think that's what's keeping our pricing a lot lower than what it could be. Once the Olympics is here in 2028 and all the cameras here showing you how nice and beautiful everything is, at that time, I don't think anyone's going to be talking about looting, because guess what? The police is probably going to be very, very strong here when you have the world, you know, traveling to that country. Crime is going to be an all-time low. So I think this is a temporary situation, and we're of a unique buying situation.
For sure. Somebody asked, is Airbnb arbitrage feasible?
So Airbnb arbitrage is feasible. It is a business. I have maybe 1 or 2 arbitrage, and I do the arbitrage for data. So I don't really do it for business. The reason why I don't like Airbnb arbitrage is because I'm a real estate agent. So, you know, the property equity is the cake, right? Airbnb is just the cheat code that allows me to have the holding power to compete with other people that I shouldn't have. What do I mean by that? Okay, let's say this house is 500,000, or let's say $1 million, right? And me and one other person are competing, and we're both investors. But he is going to put 40% down and do long-term rent. I'm going to put 25% down, and I'll be cash flow positive, right? So I'm able to bid a little bit higher than him, because for him, every amount over that he goes up, he has to come out of pocket, or because he has, in order to make it work for him, he has to put 40% down, because he's only getting like 3,000 or 3,500 in rent. Whereas for me, I can outbid that guy. So I already have a built-in advantage versus other investors if I use Airbnb, because the likelihood of another investor bidding on the same property for Airbnb is probably low. Most people are not doing this. Very little people are doing this. And what I want is the equity, because the cash flow is great, but the equity, you know, in LA, you could have a property go up by 20% in 1 year, and it's normal, right? So, for example, I have a client that I told to buy in Inglewood. He bought it for $550,000. He put 20% down. That's $100,000. This is back in 2015. That same property now is worth over $1 million. So he has $500,000 in equity, but he only used $100,000 to buy the house, and he's been cash flow positive, right? So think about it, right? 100,000 becomes 500,000 in 2015 is, what is that, 8 years? That's 5x. It beats the market. It beats any stock market. So this, for that reason, is the reason why I want to own the real estate. I want to own the real estate because although arbitrage can make sense and it's a business, there's no real wealth there. You know, like if I, for example, let's say I have 10 arbitrage making me a cash flow 10,000 versus 10 properties that I break even with Airbnb. 10 years from now, I could be worth millions. But the arbitrage, there's no wealth. I mean, it's 100,000, fine, times 10 is $1 million, but each property may have $500,000 in equity, and that could be $5 million. You see what I mean? How many can I buy right now before the Olympics is like my main prerogative and what I share with my investors.
For sure. Can you tell us about the white glove property management service? Like, what does that cover? How much does it cost? What percentage? And all of the services that you guys provide that are maybe above and beyond what other property management companies provide?
Yeah, sure. So we charge 20%, and here's what the 20% gets you. So the first thing is we probably researched over 30 cleaning teams before we found the cleaning teams that we like, right? So cleaning for me is number one, you know, because even though you can catfish someone into checking in, if the cleaning sucks, they have the right to cancel and you can lose that entire amount because they have pictures showing how dirty it is, right? So cleaning has to be top notch. It has to be Ritz-Carlton quality. That's number one. Number two, we design the property and we make sure that the property looks great and we help you put it together. You don't have to do anything. We will watch for the delivery. You can just, some clients, I just email them an Excel sheet, like here's all the budget, here's what we're gonna order. They go, approve, here's my credit card. And I start buying and I start doing all the inventory. And then I have people that will go to the property to make sure that, you know, it's there, push it in, and I account for all the packages. And then break it all down, put it all together, throw away the garbage, make sure every drawer has the forks and knives, right? Send the photographer there, get it launched. And then after it's launched, we have people on staff that answer 24 hours. And and also watch the cameras. So we're also contracted with a private security team that in case we have squatters or someone that gives us problems, because it's a short-term stay, they have no tenant rights, we can kick them out. If they give us problems, we call the cops, and then along with the private security with the footage, and then they escort them out. So, you know, it's complete hand-to-hand, end-to-end. And also we make sure that you get the most for the night. And the way we do that is we test out a bunch of software out there. The software that we use, we really like it. It tells me what the flights coming in, how booked they are, what are our other competition and how booked they are. And then it gives me a graph for what I think, for what they think the pricing should be. So if I put a base price $300, it could be $700, it could be $150, depending on what the graph is. And I like that because it means that I can, you know, get the very highest, as high as possible. And that's how I get these kind of revenues.
Awesome. All right, last question. Mauricio wants to know, Robert Kiyosaki, I think recently said something about, you know, Airbnb leading the market crash or something like that. What's your take on that?
I totally agree with Robert Kiyosaki and what he means by Airbnb is going to lead the crash. However, you got to really think about what he's saying. When he speaks, right, he's talking for the entire United States, right? So Airbnbs, in my opinion, like in Palm Springs, Joshua Tree, you have a bunch in Miami, you have a bunch in San Diego, and San Diego and Miami, the reason I bring it is because for a long time, they didn't have any permit restrictions. So they have a gluttony of them, right? All these type of areas that most people think Airbnb and they try to buy those properties, those areas are definitely going to suffer. Inland Empire, Airbnb, I think is going to suffer. right? But the Airbnbs that I pick are all in LA Orange County. And because they're in LA Orange County, the reason for travel is not just vacation. Okay, so I'll give you an example. In Long Beach, I have travelers that are there for the cruise. I have travelers that are there for the convention, because there's a convention and there's an event every weekend, and the convention holds up to 3,000 people or up to 10,000, depending on how big the convention is, right? I only have 10 Airbnbs in Long Beach. You know, I manage 25 overall, but there's only 10. It's not like I have a hotel and I have 100 rooms to sell. There's only 10. And there's also a lot of cemeteries there. And the reason why I bring this up is because I have people that fly in for funerals. There's a couple of wedding venues. I have people flying in for weddings. There is an allergy institute that is very famous. So I have people that fly in to stay 2-3 weeks at a time to get their kid tested. And they can only stay at Airbnbs because hotels are way too public and the kid will die if they live in a hotel. So you know, and I have people that come for like whether that's like a Grand Prix or some kind of rave or some kind of walk. So there's always something going on, you know what I mean? And then visit their family, right? So when you pick an area that is like a bustling metropolitan area, travel should be maybe 25 to 30% of, travel for vacation should be 20 to 35% of your demographic. The other 70% is like work or friends, family, those kind of things. And because, and I can see it, you know, my occupancy is still pretty high in the areas that I manage.
Awesome. Great information. I think a couple of like key points is that, like, number one, it's not about the Airbnb and the monthly revenue you're making itself. Of course, that's great. And it's all icing on the cake, but the cake itself is owning the real estate and the equity. So finding the neighborhood that is really has potential for gentrification, has a lot of development, has the Olympics events coming through, has all these different reasons for people to stay there, and has favorable regulations. Everything kind of has to match up. And then Airbnb is a cheat code for your clients to own as many properties as possible in a market where the inventory problem is just continuing to become worse and worse and worse. And I think, like, yes, there are like an influx of Airbnbs in certain areas like Palm Springs, Joshua Tree area, areas like that where the whole market going up has been supported by this Airbnb industry. Those kind of areas may actually, the Airbnb industry might lead the crash in those areas, but areas like LA, Orange County, Long Beach, these areas, the population itself, like, there's such no inventory. So like, it can't really, you know, it won't sustain that. The Airbnb market itself is not enough to kind of crash the overall market, right? Because there's just so much going on to support it.
Yeah, I think basically when people talk in generalities and they say like real estate's gonna crash, COVID, I think when COVID happened, it's like real estate's gonna crash, right? I mean, 2023, were they right? Were they wrong? Real estate crashed in the commercial sector, in the offices, in the plazas and retail space. Yeah, it's Armageddon right now. You know, if you have cash, you can buy dirt cheap, right? But residential real estate soared through the roof, right? And the stats that I showed you cannot be understated. 82% have a rate with the 4 or below, and it's fixed for 30 years. That's the reason why everybody is paying on time, except for 2.6% of the population, right? So there is no supply coming. It's not like the rate's going to adjust. Like in commercial, it's fixed for 3 years, 5 years, 7 years. So every year, something is going to adjust. So there's going to be movement. But in residential, it's 30-year fix. You're never going to get a lower payment than right now. Why would I sell this? I will sell my car before I sell the house.
Yeah, for sure. All right. So we are 6 minutes past the hour. I will wrap up then. And thank you everyone for joining us today. If you're like a potential investor and you're interested in learning more, hit up me or LC. We can arrange for LC to take you out in person and view some of his current Airbnbs and kind of look at it in person, see what it looks like, the neighborhoods look like, what the numbers look like. If you're an agent, I hope you learned something valuable today, that you're able to take this information and go generate at least 1 or 2 new clients. And if you need help and want to partner up with Elsie on the first deal, he's obviously happy to show you the ropes and help you figure out how to source the right property and how to prepare the property for Airbnb and all of that. So we will be hosting monthly webinars. So stay tuned. I'll invite everyone else to our next webinar. And somebody asked, can we get a copy of the slide deck? So we will upload our webinars to YouTube. So we'll send you a link to the YouTube as well. All right,
Cool.
everyone.
Awesome.
Thank you so much for joining us. And I hope everyone has a great rest of the day.
Awesome. Thank you guys. See you guys later.
Bye.
Bye.